Hello everyone, it's just about 6. I'm gonna wait a couple minutes for more people to dial in. So I'll start a couple minutes after 6, and yeah, just to give everyone a chance to dial in. And to those who are here, thanks for being on time. We won't begin too late, so yeah, just bear with us. Give us a couple minutes. Okay, let's kick things off. And just wanted to say hello to everyone. Happy Wednesday evening. Thanks for joining us here today. Very glad that you are. Um, just a few ground rules before we begin. There's a Q&A guess section at the bottom of your Zoom screen. So if you wanted to submit a question beforehand, please do so. Someone from my team will help you answer the question, and if not, I'll address them at the end. So I just wanted to start off by saying that today we'll be covering a specific feature of Stashaway called flexible portfolios. Flexible portfolios, as the name suggests, allows you to construct portfolios that you would like to express your investment view, or take a template that we have already provided and tweak it from there. I'll go through some of those examples as well. And then at the end, there's going to be a bit of a demo to show you how exactly to set up a flexible portfolio, to select one or more ETFs. And yeah, happy to answer any questions along the way. Some of you might be thinking about using flexible portfolios to invest using Stashaway for the first time. And based on that, I would say that you probably would have a Stashaway Simple portfolio, right? So you probably would be already invested in Stashaway Simple as a way to grow your cash. And that's a really good start. It's a really good thing to be doing. Stashaway Simple is a great way to build your safety net. It's also a great way to build your cash position in case you're saving up for, let's say, a big investment opportunity that you're eyeing. And I think overall, it's much better than leaving it in a bank account because it is a better rate, and also it's liquid at the same time. So I think you've definitely made the first step when it comes to investing your spare cash. But growing your wealth is more than just saving. It's more than growing your your cash pile. It's also about deploying capital or investing money into longer term investment products so that you can build your wealth uh, through a better return. Obviously, it comes with more risk. With cash, that comes with very little, if any, risk. but with any investments come the potential for greater returns if you accept and can take on that risk. And that's why flexible portfolios is a really good way to start, because it allows you to do so with the selection of ETFs that we have. We've already curated a very long list of ETFs, over 70 in fact, across different asset classes. So whether you want to just invest in one ETF, say be it gold or be it S&P, or you wanted to build a very say sophisticated portfolio, it's really up to you. You should also know we have other products that are managed portfolios that we have already built. Things like our general investing portfolio, which range from very low risk up to very aggressive. We also have thematic portfolios to reflect different technological advances that you might want to be a part of in the future. Check those out as well. But I would say flexible portfolios is potentially a very good place to start as well. So I think flexible portfolios first and foremost allows you to be in control, right? So let's just say you have looked at our other investment products and you think, for example, I'm not too happy with how they have selected these different asset classes. For example, I don't want so much bond exposure. I'm a bit more of a risk-taking person. I want to add more equities into this portfolio. You can do so. Maybe you're an extremely passive investor. You don't want the asset allocation to ever change, right? For our other portfolios, we change from time to time depending on the economic environment. But with flexible portfolios, if you set up one or multiple ETFs, we don't change that for you because it's at your own choice. So flexible portfolios allows you to customize portfolio. You can choose from over 70 different ETFs. And there are different types of ETFs, or different asset classes. So you can choose equities, bonds, precious metals. You can go by different geography in terms of stock markets. There are even some digital assets like Bitcoin and Ethereum on there. So if you can, and even REITs. So if you can think of an asset class, it's probably already in there. And the good thing about flexible portfolios also is that we do the rebalancing for you. So just put very simply, let's say you have a 50-50 portfolio between, say, gold and the S&P 500. And gold appreciates to the point where it is more than, say, 55% as a composition of your portfolio. Then we will actually do the rebalancing for you so that the risk that you are taking on your portfolio is always constant. If you take the extreme form of that, let's say you put 10% in Bitcoin and 90% in cash, and then Bitcoin doubles in price, that now effectively becomes 20% of your portfolio. The risk of that portfolio that you have, that you are now invested in, is not the risk of the portfolio that you first invested in, because asset prices move relative to each other. So a really good thing about flexible portfolios, we do the rebalancing for you. So you can also adjust it whenever you like. So for example, I mentioned the 50-50 portfolio earlier. You say, for example, I think gold has run its course. I would like to maybe adjust, a larger portion of this 50-50 portfolio to be 70-30. So you can actually push up the allocation towards S&P 500 to become 70%, and then the gold to 30%, and then the portfolio will adjust accordingly. Yeah. And there's also no limit to the changes you make. Obviously, we don't think that you should be adjusting your portfolio every day. Our platform is not the same as a brokerage platform. We prefer that you invest for the medium and long term and make these decisions for those timeframes. But we don't limit the number of changes you can make for those to those portfolios. Fractional shares. What does fractional shares mean? Basically, we break up the units of ETFs that we invest in. So ultimately, for you, that means that you can invest any amount, whether it's 10,000, 1,000 ringgit, even 100 ringgit. We can get you those ETFs, and even if they are less than 1 unit of those ETFs, then you can already get it if you're investing any amount. So, which is very powerful, because let's say, I said earlier, can invest in 2 ETFs or even more. But if you look at, let's say, a brokerage platform and you wanted to invest in 5 different ETFs, they all have like a minimum lot size, a minimum amount that you can invest in. But with us, with flexible portfolios, you can decide on the weightage, right? Let's say these different ETFs, you have allocated it to something a little bit more risk taking. You're happy with that, and you invest just 100 ringgit, 1,000 ringgit, whatever it may be, and it splits into those 5 ETFs according to those weightages. So ultimately, it's a really good place for people to start. It's a good place for people to start accumulating a position into a portfolio. It's also a really good place if you wanted to size your investments accordingly. Let's say you have 100,000 in cash and you wanted to dollar cost average 1,000 ringgit into a portfolio that you've created with 3 different ETFs, right? To do that on a separate platform, like a brokerage platform, would be quite difficult because of the minimum lot sizes. But because of fractional ETFs, we can already enable you to get exposure to those 3 ETFs in the portfolio and ultimately get into the position that you want to be. Curated ETFs, right? Like I mentioned, you have 70 different ETFs to choose from. We have done all the homework behind these ETFs. So you might think it might be easy to select between, let's say, an S&P 500 ETF because there's, let's say you do a search on Google or you go to your brokerage account and you see that there's like 5 different S&P ETFs, right? More or less the same. But we have chosen the best out of that lot. But where it really matters is when you have more kind of the ETFs that are a bit harder to find. Let's say a thematic ETF or ETF that is, let's say, a bit smaller. So it's like there's not as many issuers out there. We pick the best one for that asset class. For each asset class, we pick the best one based on cost. We want it to be really cheap and liquidity. So it's easy for us to, and you by extension to get in and out of, and ultimately also keep the cost low. And tracking error, making sure that the ETF that we have selected for you actually mirrors or follows the actual underlying asset that it's trying to mirror, so that you don't deviate from the thing that ultimately you want to invest in. And like I said before, there's no minimum, so you can invest a small amount. Small is relative, right? So you can start. There's no, and we don't impose an absolute minimum amount. But let's say you start with $100, that's fine. You can start with $1,000, that's fine, all the way up to large amounts. There's also no lock-in. So like our other liquid portfolios, there's no lock-ins, like minimum investment period of like 1 year or 6 months. If you invest in something and you make a gain and you want to cash out, that's fine. If you make a loss and you want to also recover your capital, what's left, you can also do so. There are no lock-ins to these flexible portfolios. So it's really easy to start. You can start from scratch or alter a template. You can add and remove different asset classes. You can change the weightage, and you can also find out how much risk you're in. So just before you invest, this is a pretty useful tool. I've used this flexible portfolio myself. Once you've created a portfolio, we tell you how much risk you're taking, whether it's high risk, very high risk, or balanced. So you have all the information you need before proceeding. If let's say you pick a portfolio that has a lot of thematic ETFs in there, cryptocurrencies, obviously very high risk, will show you kind of the risk at the end. And if you want to back off and kind of not invest in it, maybe start again, you can definitely do so. So with flexible portfolios, you can start from scratch. Or you can start from a template. I want to focus a little bit more from, starting from scratch, right? So let's say you speak to a friend and, your friend says, I have invested in the S&P over the last 5 years. I'm very happy with it because it mirrors the returns of the S&P 500. It has averaged me about 12% returns per annum, which is what the S&P has returned. And I've dollar cost averaged into this portfolio. I'm really happy with it. My intention in investing, you might have read, is I want to select low cost, passive, index tracking funds using ETFs, right? So Some people are really inspired by Jack Bogle, the founder of Vanguard, basically the father of index funds. ETFs are basically listed index funds. At least most of them are. So if you wanted to just DCA into an existing index, be it the S&P 500, the NASDAQ, MSCI World, or a bond index, you can do so. And there you go, right? So you speak to a friend, your friend says, I'm doing something really simple. I'm dollar cost averaging. Flexible portfolios is the best way to do it, right? And like I said before, we don't limit the amount that you actually dollar cost average in. So if let's say you wanted to start with 10,000 and then do a DCA of 1,000 every month, you can do so and not really have to worry about the size of your investment going in. Maybe, just sticking to starting from scratch, maybe you then read the news and then you hear that, for example, gold is doing really well because of all the geopolitical uncertainty around the trade wars, around the wars in Iran and in Israel, or even Ukraine. So based on that, gold has done really well, and you think, hey, I definitely deserve a little bit more allocation of gold into my investment portfolio. You can again start from scratch and create a separate flexible portfolio with one ETF. The first one is S&P 500. You don't have to blend it together. That's what I'm trying to say. And then the second one can only have one ETF, which is gold, right? So then you have gold as part of your investment portfolio. And this is a really great way to invest because if you become a more savvy investor, if you become a more savvy investor and you have certain views about what to invest in, you can definitely create single ETF portfolios or add to a portfolio that you have created using Flex. So you might start off with the basics, right? Okay, I just want an 80-20 portfolio, equities and bonds. Okay, I'm going to throw gold in there. But then you might get a bit advanced and you probably want very specific sectors. I have friends who do this. They tell me, oh, I'm very bullish about Chinese tech. I'm very bullish about European defense because of all the increased budget allocation towards national defense in Europe. So based on that, they make kind of tactical bets on specific industries, and then you go from there. If you're excited about thematic things like EVs, AI, space, kind of tourism, you can definitely do so using this as well. I'll spend a bit of time talking about the templates. So we have a few, and what you can do is, okay, I don't really want to create from scratch because I don't know what to invest in. And if I put a few ETFs into a portfolio, I don't know how much weightage to put on each one. Should it be 40, 60? I don't know. We already have some prepared for you, right? So the ones that we have prepared for you is a world tracking index. A world tracking index means a few portfolios, I think it's 3, that basically has world equities and world bonds. And you can choose a very aggressive one or a very conservative one. So you basically want global, total global world exposure, and say you want 60-40, you can just invest using one of the templates that we have there as well. Our investment team has built this, and over time, if you want to change the composition of these portfolios, you certainly can. And if you want to remove, tweak certain things, you also can. Speaking of removing and adding, we have all these different asset classes ready at your disposal. You have from, things like cash, short-term bonds. You have medium to long-term bonds like government and corporate bonds. If you're an ESG kind of person and you want to invest in green bonds, you certainly can. We have global equities, US equities, and all the corresponding sectors that represent US equities. Let's say you want to double down on tech, you can. You want to go into EVs, you can. You want to go to things that are into blockchain, find an ETF for that. With commodities, there's gold, silver, and uranium. Depending on what you want to invest in, we certainly have those choices available for you. And REITs as well, US and international REITs. So if you have a view on any of these things, you can select them in flexible portfolios. You can also adjust, right? Just I've said this before, but I think this is just more of an interface. You can choose to change and tweak the different weightages. This is probably suitable for someone who is a little bit more advanced. Why would you do so? I think let's say you do a review. You do a review on your investment portfolio and your life circumstances, and you think that, yeah, I think I want to take less risk. Maybe you have just decided to take a career break. Maybe you're not you're in your um early 40s and you want to explore a new career path. You're taking maybe 6 months off to travel, 1 year off to think about your next move. Maybe you have entered into a very big uh, maybe you took on a really big loan, right? Let's say you bought a house, a really big one, and you wanted to play it safer when it comes to your investments. You would use this feature to change the weight of your of the ETFs that you're invested in that portfolio. How you would also use this is if your investment um, outlook changes. So we're in a stagflationary environment right now. Markets are, still doing very well. Equities at all-time highs, cryptocurrencies at all-time highs. Tech stocks, obviously driven by AI, doing very, very well. Let's say something changes. Let's say because of Trump and the tariffs that he's putting out there and imposing, the US goes into a recession because inflation is too high. We go from a very extreme case of expecting interest rates to come down to, in fact, not just at the same levels for longer, but even maybe interest rates going up. Then you foresee a shift in the US economy away from good times into a recession. You can tweak these weightages to increase the allocation towards gold, allocation towards protective assets like bonds, and to be safer in that environment. And just before you invest, like I mentioned, we tell you how much risk you are taking. And we will indicate that with a number, which we call a Stashaway risk index. So the higher the number, the higher the risk, the lower the number, the lower the risk. And what that number indicates is there's a 1% chance that your portfolio will lose that amount or more. So if you look at this 25% number, there's a chance your portfolio will lose 25% or more, a very small chance, like 1%. So 99% of the time, you will lose less than 25%. 99% of the time, most of the time, unless there's a black swan event like COVID or a global financial crisis, you would stay within this risk index and lose less than that amount. For those of you who are interested, that's actually called value at risk. It's a risk metric that we use to basically tell you your theoretical maximum downside unless something really, really improbable happens. So I think we're almost at the 30-minute mark. Who is this for, right? I'll just to recap. It's for someone trying to build their own portfolio. Maybe you look at some of what Stashaway has done and say, I want to take a bit more risk. I'm not too uh, I'm not too attracted to some of the higher risk portfolios that Stashaway has currently, on its shelf. I want to build a portfolio for myself. That's who it's for. It's realistically for someone who's a bit more advanced as well. Maybe you used to be a stock investor. Maybe you used ETFs to invest, but with some investment experience, that would really help because you know how to size your risks. Quantify your risks and size your investments in those ETFs accordingly. You know what to choose, right? You have an investment view, and you balance that investment view with the other investments you already have, right? And it's for someone who basically wants more control of what they invest in, as opposed to leaving it to fund managers like Sashway to choose for them. Let's go for a demo. Okay, let it load. So here's how to choose a single asset. See here. Okay, here's the home screen. Okay, I know my head's cut off, but for this purpose, I don't really mind. So I'll just play the little clip here. So this is the home screen. Start off by clicking the Create tab and then the Customize tab. Customize leads you to flexible portfolios. Click Build from Scratch. That's really where, the gateway into opening up Flex. So there it is, right? It tells you you can add asset classes you want, set your allocation, and preview your portfolio. Okay. So here's the list. At the top in the green section, you can see new and popular investments that, ETFs that we have listed on this menu over here. You can see that you can see the ones that are new and you can see the ones that are popular. So obviously gold's very popular right now. S&P is very popular. You can see crypto is quite popular. If you see the moon over there, that indicates that ETF is Sharia compliant. So if you're building a Sharia compliant flexible portfolio, you can use the filter over there under more filters to look for the Sharia compliant screen and then pick from 9 different Sharia compliant ETFs there. But if you're not concerned about that, you want to just scroll through the rest, you can see, there's bonds, corporate bonds, government bonds, US, there's commodities like we talked about, all the way down to equities and, all the different sectors. So here, the example that I'm going to choose is investing in one ETF only, single ETF, and that ETF is gold. Maybe, you have observed that it's done very well in the last few years. You want to invest in gold, and then you click that, leads you to the allocation page. Okay, allocation page means that you have to put a certain weightage or a percentage towards that ETF that you have chosen. In this case, it's very simple because there's only one. You just have to put basically 100% allocation towards this ETF. So you can see here that there's cash 1% and 99% will go into the ETF that you have chosen. Why 1% cash? Is because we keep 1% cash in US dollars, US dollar cash, just for us to collect our management fees. But if you invest in a single ETF portfolio using flexible portfolios, just put 99% towards the ETF that you have chosen. So there'll always be this 1% that is, that is already allocated. Okay, so 99, move on. And here's where we tell you the risk level. Like I mentioned, you can preview the risk. It tells you that this is aggressive. It's aggressive because gold has done, has been very volatile, more volatile on the upside in the last few years. And it's only a single ETF. That's why it's also riskier. And you can see the returns profile at the bottom. So you can see how it's done all time since 2018, how it's done in 3 years ago, how done as well 5 years ago. And then you proceed from there. Okay, it tells you that it's a flexible portfolio, it's aggressive. Okay, done reviewing, move on to deposit methods. Okay, deposit method. You can transfer from another portfolio. So why I'm showing you this transfer from another portfolio is if, let's say, you have a Stashaway Simple portfolio you want to transfer from and do a one-time transfer or a recurring transfer, you can definitely transfer from Stashaway Simple into this new flexible portfolio you have created. You can choose the amount, say from which portfolio. You can choose a simple portfolio. I don't really have one right now, but you can choose your simple portfolio and go from there. You can also do a direct debit. Direct debit pulls from your bank account and you can put one off, or you can do a scheduled one, meaning you can do recurring investments. I've clicked here one off. Just put in the deposit date. Let's say I pick, next month, and then $100 just to start, just to try. Continue. So it tells you where it's pulling from, the date, the amount, confetti. So that's done. So your scheduled deposit is in line, and you can expect your flexible portfolio, which you've newly created, to be funded very soon. So then once it's created, you can see it's over here, flexible portfolio. I'm just going to rename it now because I've invested in gold and I want to label it so that I am clear. It shows you what you've invested in, 100%, essentially into gold. Just typing up the name of the portfolio here. So I've successfully named this portfolio gold. So there's no misunderstanding. And you can see right there, it's already named. Okay, so that's it. It's quite straightforward. Not difficult to start. All you have to do is choose one portfolio, choose which ETF you want, sorry. Start with choosing which ETFs you want. In this case, just one. Choosing the weightage, in this case, essentially 100%. And then from there, choosing the funding method. Okay, what about investing in multiple ETFs? Not difficult. Again, click Customize. Click Build from Scratch. Click Continue. Will bring you to this asset selection screen again, which you are now familiar with. I'll go ahead now and choose 2 ETFs. Let's say I want to go with the S&P 500. I can just, I won't have to scroll all the way to the bottom. I just click it here because it's one of the more popular ones. I can find out more about the S&P. I can see the returns. I can see the description. I can see how well it's done over different periods of time. Okay, then go back. And I want to select the second ETF. I want to select bonds in this case. So I've selected 10 to 20-year treasuries, looking at the returns, looking at the description. Okay, looks good. Selected that one, and then continue to adjust allocations, meaning how much you want to put into each ETF. Just scrolling all the way down so you can see what's there as well. Okay, so you have to allocate between 2 different ETFs. Before it was just one. So again, not very difficult. Let's say I want to put 39. Why 39? Because let's say I want a 60-40 portfolio. I just take the 1% away from the bonds. So let the 1% go into cash. So essentially 40% in the bonds. And then with the S&P, I'll put 60. So you can see 100% allocated and move forward. So it tells you that this is a balanced portfolio. Makes sense, right? The 60-40 portfolio tells you the all-time returns of this portfolio as well. It's a really useful feature. Tells you what risk you're taking, tells you what return it has produced. Shows you the different sectors. Proceed from there. Just to review it, okay, you have a portfolio that is balanced in risk. And then you move on to deposits. So yeah, fairly simple. Direct debit. And we do a one-off just to start. Schedule date and also amount. And there it is. Not too difficult. Pretty easy actually. Then you go to the main page and you can see the flexible portfolio is there. You can rename it if you like, or just to see your 60-40 is already locked in. Okay, yeah, really easy. Moving on. We have a exciting offer to give to you today. If you invest more than if you invest any, oh, okay. So from now until 30th September, you can invest in any investment portfolio, and we would give you an additional 0.15% into your simple for 3 months. So basically, if you invest fresh funds into any investment product, we've just talked a lot about flexible portfolios today. All you have to do is type in the code IP invest, and yeah, just invest any fresh funds into a flexible portfolio that you have built, and we'll give you an additional 0.15% per annum for 3 months. We're doing this because we know that you probably already have a simple portfolio, which you're very happy with the rate that is already there. So you would get an additional 0.15 booster for 3 months on any amount. So if you have hundreds of thousands in your simple, there's no ceiling. And this promotion is valid for only fresh funds deposited between today and the end of next month. Okay. So FYI, if you do a integral transfer, meaning you transfer from Stashaway Simple, it won't apply. So this only applies to fresh funds. Okay. So yes, that's it from me. If you are keen to ask any questions, happy to do so. Put it in the chat, put it in the Q&A box. If it's already been answered by the team, thank you very much. But yeah, I think overall, flexible portfolios is a really useful feature if you want control, because you have investment views. You're someone who's a little bit more intermediate in their investment journey. If you're excited about investing in different themes or expressing your investment view in a very particular way, that, if you look at our current managed portfolios, you think, I think I can do different and do better. All the power to you. Go ahead and try out flexible portfolios today. So thank you very much for joining. If there are no questions, we can end here. Do poke around. You don't have to fund a portfolio to get started, but I think you essentially have all the knowledge you need to get started. And also look forward to more webinars like today, where we talk about different investment products that Stashaway offers. And I hope to see you then. Thank you so much for today. Bye, guys.